Hello guys, welcome back to a new video. In this one, I'm gonna show you my high win rate trend continuation setup or model. This is my personal model that I trade with every single day, and it has a really high win rate. You have seen me post trades on this channel based on it, and also in my Twitter account. This model is, you can call it a power of three on steroids. It is the power of three formation, but it is enhanced by dtfx concepts. The rules and the micro rules, right? The details are based on dtfx market structure concepts, all right? It is so simple and based on pure logic, and it has few moving parts. You don't have to think about time. You don't have to think about all kind of concepts. You only need to focus on market structure or what is in front of you. First of all, I'm going to show you the pattern that you want to look for, all right? And then I'm going to show you the context that this pattern will work most of the times. So first of all, in order for you to beat the market, you need something that repeats, all right? And then you need the right context for that pattern. So if you have a pattern in the market that repeats every single time, every day, on every time frame, and sometimes it works, sometimes it doesn't. Now all you need is the context of where that setup worked and where it didn't, right? So you're gonna focus on only the correct context, and I'm gonna show you all of that in this video. I'm gonna give you the exact trading plan to follow, and then I'm going to show you a lot of chart examples in order for you to understand better this model, all right? So this video is going to be a little bit longer than the rest of my previous videos, but believe me, it is worth it, all right? After this video, after finishing this video, you're going to have a complete model that works and that has a high win rate. I'm going to show you exactly why it has a high win rate, all right? So without any further introductions, let's just get started with the explanation, right? So first of all, let me present to you a case study, all right? A simple drawing in order for you to understand the logic behind the setup. And I'm pretty sure you have seen this setup repeat whenever you open the chart. So if you are an SMC trader, if you are a dtfx, if you have a different style of trading, it doesn't matter. This model is based on logic, pure logic, and it will not negate the things that you learned from a different school, all right? So let's suppose that we have a point of interest. I like to call it the point of interest in order for you to understand. So because I don't want to specify this point of interest, some of you it is an order block, some of you it is a fair value gap or a breaker block, swing points, supply, demand, it doesn't matter. You have a point of interest right here, and it is a bearish point of interest, right? So the idea is that price is trading toward that point of interest, right? And your trade setup or your trade idea is to short from that point of interest, meaning once price reaches this point of interest, you want to look for something like this, right? So a market structure shift and then a continuation to the upside or the downside, I'm sorry. So you have a point of interest and it is a higher time frame, and you are waiting for price to come to this point, and then you're going to look for a shift. That shift can be different from one trader to another. Some of you will use like inverted fair value gaps, regular market structure shifts like this, or flips, or candlestick structure, a change in the state of delivery. It doesn't matter, all right? So once price reaches to this area, there is two possible scenarios, price or maybe three possible scenarios. The first scenario is that price is just gonna keep trading higher and higher and higher, and it will not give you that point of interest, or that shift. So that means that this point of interest didn't offer a rejection. That's the first scenario. The second scenario is that you actually have that flip. You actually have that market structure shift, right? Price return back into here, and then you took price lower. And this whole trend is now shifted from a bullish to bearish. That's the second scenario. The third scenario is we have a fake shift, right? A fake shift right here. You take the short and you get stopped out and price continue higher. So once price retraced back into this leg, you take the short, price gave you some profit, but it didn't reach your tipping, maybe somewhere around here, and then it reversed. So 3 possible scenarios. But if you take a closer look at this, while we were waiting for this point of interest to get hit, we missed 1, 2, 3, and even 4 opportunities to buy. We have missed multiple opportunities, clear swings, and I believe that you have seen this repeats over and over every single time you open the chart while you are waiting for that point of interest, for your point of interest to get hit. You have missed a lot of selling opportunities into a bullish point of interest, or a bullish or a buying opportunities into a bearish point of interest. A lot of opportunities that have been missed, and you were just waiting, and you were just standing there waiting for that contrarian trade, for that trade to reverse all of this beautiful trend and take price lower. Now, I don't mean that this is wrong to wait for that market structure shift, but what I mean is we are missing a lot of opportunities to trade with the trend, with the current trend, and we are waiting for that contrarian trade to happen, to reverse the whole thing, right? And here, let's say that price did reverse from here. It flipped from this point of interest, and we have a market structure shift. We entered from the retracement, and maybe we exited from here. So now what happens is that price is going to continue creating lower lows and lower highs right here. And we missed also this short, and this short, and this short right here. A lot of opportunities to go lower, and we just entered from here and exited from here. So on the downtrend, you can enter here, exit here, another entry from here, exit here, another entry, and you have multiple entries instead of waiting for the next bullish point of interest to get hit and then taking that flip again. So while we are waiting for our higher time frame point of interest to get hit and take that contrarian trade, we are missing a lot of beautiful continuation setups here and here. So the whole model is based on how to catch these continuation trades. So this is the presentation of the model. So I started analyzing my trades. I started analyzing previous charts, the backtesting, tape reading, noticing what makes this setup works and what makes it doesn't work like this. And I believe that I have found the winning formula, the right parameters or the conditions that makes a continuation trade an A+ setup. So what do you want to see in order for you to take that entry from here, the short from here, or the short from here, or from here, or the buy from here? So this video is all about this one. Again, this video is going to be divided into 2 parts. First of all, I'm going to give you the model, or the pattern that you want to memorize and train your eyes to see it every single day. That's a pattern. Now we need the context, all right? We need a pattern and then we need the context. First of all, we're going to start with the pattern itself. So the pattern is something like this. Price is trading higher. We have a pullback and then we have another continuation to the upside, all right? Another expansion to the upside or another leg. Here, after putting this leg and suppose that price is going to continue higher, right? We have three possible scenarios. We have only three possible scenarios. And this is a protected low, guys. Protected low because we created a new high with the body closure above the previous high, all right? So, as I said, we have three scenarios right here. The first scenario is that price is going to give a shallow pullback and then continue to the upside. This happens when we have a really, really strong trend. We're not going to cover this one right here. This is not our concern, all right? We're not going to trade this scenario when the trend is too strong. The second scenario is price is going to reverse after creating this expansion leg. We're going to have a quick expansion, a quick pullback. What I mean is that one candle or two candles into this swing point and then continuing higher. This is the second scenario and we're not going to use exactly this, but you're going to understand why we're not going to use this one, all right? Later on. The third scenario is that price is going to do something like this, and this is what we want to see. Price is hovering above the zone. Which zone? This zone right here. This unmitigated zone. I don't know, you can call it an order block. For me, it is a swing point. Price, a lot of times, it will retrace back into the zone and then continue higher, all right? So, price is ranging above this unmitigated zone. Maybe we have a break of structure right here, but we still have this zone unmitigated. And we have a lot of stops just above it, right? We have sell stops, as you can see here. So, what we want to see is that a quick move to the downside. It doesn't have to be quick, but a lot of times it will be a quick one, and you're going to understand why. So, a quick down move, topping into this one, all right? And this is our setup. This is our model. Entering from here, when we see this quick move to the downside, sweeping all these lows, all right? Breaking this one, for example, breaking this low. So this is considered as a market structure break. Why? Because we have a break of structure right here. And a lot of traders will see this as a market structure shift, right? So once price sweep this lows, tops into this previous unmitigated zone, we're going to enter from here. Where is our exit? Our first exit is this one, is this previous zone that has been left after the break or the market structure break happened here. So most of the times, price will leave an unmitigated zone when sweeping these lows right here. And this is our first entry or our first TP. The second TP is this high. And of course, if you are in the right context, we are still bullish on the higher time frame, price is going to go way, way, way above this high. But in order for us to maintain that high win rate, and this is my personal preference, I don't force you to exit from here every single time, but I'm going to explain to you why exiting from here is the wise choice, and it will guarantee you that price will always give you this, all right? It will always give you this move, and you can exit from here and you can have a high win rate. So when we enter from here, after the sweeps of lows, right, and then this unmitigated zone, we have multiple reasons to go to the upside of price to reject. The first reason is that we are in the right context, meaning price is bullish, price on the higher time frame is bullish, and we have something to the upside to reach for. This is the first thing, and that's the first reason why we should reject from this zone right here. The second reason is that this zone is a fresh zone. It is an unmitigated zone, meaning it can, and in most cases it will offer rejection. Price didn't tap into it or didn't tap deeper into this zone before. For example, we can have a top from here, we can have a shallow top, but this top is really deep, right? Maybe to the 50%, and that means we have a really good chance of price rejecting from this zone. Reason is that once we have this market structure, price in most cases will leave unmitigated zones to the upside, right? For example, this one. Now, even if price is going to continue lower, meaning this market structure break is not a fake one, is not just to sweep the lows, this is a real one, and price is going to continue lower. In most cases, it will give you that retracement, right? It will give you that retracement to the zone right here, and you have exited your positions, and price can do whatever it wants. It can trade higher, or it can just reverse. And I've seen this a lot of times. A lot of my positions, or a few of them, right? Price traded to this zone and then completely reversed. So although price failed to hold and create a new high, I still get my entry. So I hope you understood why this model has really high win rate for all the reasons that I've mentioned before, guys. Now, like I said, if you are in the right context, price after sweeping these lows and tapping into this zone, it will give you a strong rejection to the upside, a strong rejection. Price will not keep consolidating in this zone, give you like a drawdown. No, most of my trades, guys, has absolutely no drawdown and immediately reaches my TP, immediately trade to here, or just continue higher. So this is the pattern, and I'm not gonna force on you whether you exit from here, from this zone, or from here. All you have to do is to backtest this and find the best balance between a high RR and a decent win rate, because you don't want to take 10R trades every time aiming for that new high, right? For 6R or 7R, and you have a really low win rate, like 30% or 25%, because this is bad for your psychology, right? Alright, so now let's talk about the time frames. So suppose that this pattern happened in the 5-second time frame, alright? So let's write here 5-second time frame, and of course you can use any single time frame you want, but let's suppose that this is the 5-second time frame and this is our entry time frame. Meaning here you're gonna choose your entry time frame. If it's a 1 minute, of course you're gonna use a higher time frame for that, like the 15 minute or the 5 minute or the 1 hour. Alright, so let's suppose that this setup happened on the 5-second time frame. In a time frame like the 15-second, and this is what I always look for again. So I'm aware of what the 15-second is doing, right? The 15-second is going to be like this. Maybe we have 2 candles right here, or 3 candles. So these 3 candles represent this range on the 5-second. And then what do we have? A pullback, a simple pullback into this zone. So this green zone, guys, is not, or it doesn't belong to the 5-second time frame. Although it is visible on the 5-second time frame, it doesn't belong to the 5-second, but it is a higher time frame zone. Just like you see, for example, a 5-minute zone, it is also visible on the 1 minute. It is bigger one on the 1 minute. It has more candles, right? But it doesn't belong to the 1 minute. It is actually a 5-minute zone. So this green zone, it is actually a 15-second zone. Price, maybe printing 3 candles from here, right, or 4 candles, it doesn't matter. It will do a simple pullback into this green zone, into this 15-second zone, and then continue higher. So this is the 15-second zone, right? So on the 5-second, what it looks like a market structure break, it is actually only a normal pullback, a healthy pullback into the zone on the 15-second time frame to continue higher. So this is the 15-second trend, right? And on the 5-second, it will have these manipulations and sweeps and market structure breaks. These market structure breaks are not intended to take price lower and reverse everything, right? Are not intended to reverse everything, are not intended to reverse the whole trend, but only to return to a previous zone, which is a higher time frame zone, like this one. So this is the pattern that you want to look for, right? And now we need the context. We need the right context. And in order for us to add a context, of course, we need a higher time frame, meaning what the higher time frame is doing. Is it trading higher? Is it rejecting from a zone? Is it trading lower for a reason? All right. So that's the context, and you don't want to immediately go to the 5-second time frame and look for this and take every single setup. Sometimes it will work, but it is better to use the right context with that. And in order for you to use the right context, of course, you need to understand the higher time frame. So now we're going to use another time frame for this model. We use the 5-second to identify the entry, where to enter, and the parameters. We need an unmitigated zone from here. We need a market structure break, right? We need an unmitigated zone also from here to enter from. We need unmitigated zone to exit from, right? We need the 15-second to support our idea of going higher. Now we need another time frame, which is the 1-minute time frame, in order for us to get our context. So how we're going to use the 1 minute as our higher time frame to determine whether this pattern will work or not. All right. So how do I get my context from the 1 minute time frame or the higher time frame? So there is 3 or maybe 4 possible scenarios that I look for that helps me to determine whether we're going to expand higher like this, or we're going to expand lower like this. So if we're going to expand higher, all I need so if we're going to expand higher, and let's say that this like is 3 or 4 candles on a 1 minute, I'm pretty sure that I'm going to find an opportunity or 2 on the 5-second like this that support this idea. So a continuation to the upside, right? So how do we determine that price is going to trade higher? So this pattern is going to work, right? So we need to be aligned with the higher time frame, aligned with a higher time frame expansion or a higher time frame pullback. It doesn't matter. How do we know that? So this is my personal method or my personal criteria to look for. If you have any other criteria on the higher time frame to determine the next direction, you can use it, guys. All right. This strategy or this model, you can customize it. All right. So the first scenario that helps me to determine the next or the direction of the market is this. Suppose that we have a higher time frame point of interest in here, right? A swing point, for example, or an SNDR. It can belong to the 1 minute time frame, or it can belong to the 5 minute or the 15 minute. It doesn't matter, right? So let's say that this is a 1 minute time frame. This is the 1 minute time frame, and price is trending lower on the 1 minute. All right, it hits this area, and we have some kind of a rejection out of it. So maybe we have a flip, and now the price is trading higher. So we have a flip, on the 1 minute inside this zone. Of course, it can be the 1 minute or the 5 minute, doesn't matter. And now we can expect an upside like 3 or 4 or 5 or 6 candles to the upside, maybe reaching this as a first target or reaching maybe a sell to here or continue to the upside. So now we have a good idea of whether the market or price on the higher time frame is going to expand higher or lower. So now we're going to need to look for these patterns right here, these continuation patterns, bullish patterns aligned with the higher time frame like this one. Another scenario that it will give me the direction of the market is, suppose that we have a high right here, an old high like this, and price was trading to that high like this, and it fails to close above this high. So maybe we only have a wick right here, a wick, and then closing below the range. All right, so we don't have a closure above, and we have a candle structure shift in here, inside here. A candle structure shift is basically like this. Let's say we have an up close candle here, another up close candle, and then maybe we have a wick like this, and this line represent this high right here. And what happens next is that we close below this candle right here, and this is a down close candle, only a wick right here. We fail to close above this high, and we have a candle structure shift here. We close below the last low that created the high, as you can see, or the last candle that created the high. And especially if we are bearish overall, right? Especially if we are bearish. So this high is a short-term high on the 1 minute, price action back to it, failed to close above it. We have a candle structure shift. So now we have a pretty good chance that we're gonna we're gonna trade lower, continue lower. So that gives me the permission to look for this setup side here, this 15-minute or 15-second. Of course, it's not going to be like this. This is a bullish example, but bearish example. We need bearish trend on the 15-second like this, and we're going to look for this pattern on the 5-second. Right, so we are basically selling fake break of structures, fake market structure breaks, right? So in this example, it's going to be like this. So this is the 1 minute time frame, and we decided, or we determined, that it's going to trade lower. We have a high probability that it's going to trade lower, right? So the 15-second is going to be like this, and the 5-second is going to be like this. Now, not every single leg is going to be like this, but most of them is going to have a fake or a run above these highs, right? And then topping into an unmitigated zone like this one, and then continue. So this break is represented as a pullback on the 15-second time frame, and we are aligned with the 1 minute time frame as we are trading lower. Now you can be fluid with the time frames. So for example, sometimes I see this pattern right here. I see this pattern happens on the 15-second time frame. So it happens on the 15-second time frame, and then I'm going to take, so this is a 15-second pattern happens on the 15-second, and here this is not the 15-second. Now this is the 1 minute. This is the 1 minute, and I'm going to enter from the 1 minute because I know that the higher time frame, for example, the 5 minute or the 12 minute or the 15 minute, is bullish in this case. So I'm going to enter on the 15-second time frame based on a 1 minute pullback and a higher time frame general direction. All right. Now, after we cleared the time frames, how time frames work together to give us that idea, now this is the most important part, and it is the filters. These filters I have gathered from a lot of losses, right, in backtesting, and this is why you need to take losses in backtesting, because you're gonna find a lot of valuable intels on your model. So why does your model, or why this pattern loses? All right, the first filter that you're gonna talk about is that, let's say that this is the 15-second time frame. All right, so basically we are shorting a 15-second pullback into here, and then we are shorting that expansion lower, and we are using the 5-second to look for this sweep into an unmitigated zone, right? And then continuing lower. We are using the 15-second basically, or we are using this one to get the best possible entry. All right, we need this liquidity to happen above the unmitigated zone. All right, this is important. So after a series of lower lows and lower highs, you need to understand, guys, that the market is not gonna keep going like this forever. It needs to retrace like this. Of course, it's gonna create like higher highs and higher lows. So for some of you, we'll short this because it is consistent with this one. We have a fake break of structure against the trend, and you're gonna short the sweep. But remember that price is not going to keep going down and down forever. So at some point, this break of structure, right, this pattern is not going to continue to the upside. It's going to fail like this, and sometimes it will not give you that. It will not give you that retracement to the unmitigated zone. It's just going to keep going down and down and down. So why this happens is that this flip or this failure happened because on a higher time frame, price after the expansion, it's going to need to retrace after hitting some kind of a point of interest here. All right, so you need to pay attention. And how do you time, and or in other words, you stop looking for continuations to the downside in this example? The first filter is that when we hit a zone, when we hit a higher time frame zone that could potentially trigger the pullback like this, or even the reversal. All right, so you're going to stop looking for reversal, stop looking for continuations. That's the first thing. All right, and now you're going to start looking for flips or contrarian trades, or you can just stop looking for trades and wait for the market to either continue in or start a new trend, and then you're going to look for continuations, or it's going to rip through this zone. It's going to continue to the downside. You're going to look for more continuations. All right, so the first filter is once price taps into a higher time frame zone that could trigger the pullback like this, you're going to stop looking for continuations. The second filter is that after a series of swings like this, just like Dave said, after 4 or 6 swings, you can expect the reversal to happen. So if we count one swing, the second swing, the third swing, the fourth swing, the fifth swing, now you can stop looking for continuations, and now you know that price could potentially reverse on you, right? Now, another filter is that, let's say that we have this like this. All right, so we have that pattern that we are looking for in the 5-second. On the lower time frames, our entry time frame. And suppose that we are aligned with everything that we have mentioned on the 1 minute, on the 15 second, and price didn't give you that top to continue lower. But what it did is that it created a new low like this. And now price can easily go back all the way to here, tops into the zone, and then continue lower. So it can do this. Now we have two patterns. We have this one. So price can go to here and then trade lower, or it can go all the way to here and then trade lower. So here, this is entirely your choice, guys. This is something for you to backtest. Sometimes price will go all the way to here and trade lower. Sometimes it will trade to here and trade lower, all right? For me, I would take the first zone like this and look for a 1-to-1. If this zone failed, then I'm going to take another shot right here. And when I see a rejection, I know that this is probably the one that's going to push price lower on it. And then I'm going to ride the expansion to the downside. So when you see this kind of situation, what you want to do is you want to go to the higher time frame, all right? You want to go to the higher time frame above you. For example, if this is the 5-second time frame, go to the 15-second time frame and look or identify if this zone is valid. Because remember, I told you in here that this zone on the 5-second time frame, all right, on the lower time frame, it needs to be visible in here, of course, and it also needs to be visible on the higher time frame, right? So it needs to belong to a higher time frame. So go to the 15-second, for example, and look and identify which one of these two is valid. I'm sorry, this zone right here. If this zone, for example, is invalid, by invalid meaning it doesn't have a pullback, a valid pullback. A valid pullback is something like this. Let's see, we have down close candles like this. A valid pullback, price needs to close above the last high that created the low, like this one. And then price will continue to the downside. And now this is considered as a valid pullback, and this is a valid zone. So check on the higher time frame. If this zone is valid, it means it has a valid pullback, or this one is valid. If you see that this one is valid and this one is invalid, that means that you shouldn't look for a trade from here and trade this one instead. Wait for price to come back to here. If it didn't, then it doesn't matter. Wait for another higher time frame zone to look for an entry from. If this one is valid and this one is invalid, now you can look for an entry from here, right? If both of them are valid, now this is your choice. You can either wait for this one to be high probable, or you can just enter from here. If price stopped you out, you can take another entry from here, all right? Another thing you can do is that once price taps into here, maybe look for a candle structure shift inside here, right? To confirm to you that this one is going to shift or is going to reset price to the downside. So this is another filter. And to be honest with you, I didn't achieve mastery of this model, right? It has a really good win rate. I'm profitable with it. This is my personal model, but I'm learning every single day about it. I'm backtesting every single day. I'm taking a lot of notes, and I'm constantly enhancing this model. So in other sessions, and other videos, we're going to do some backtesting videos, and we're going to learn and explore all kind of possibilities, all right? So now we need to look for chart examples, all right? This video is a bit long, but chart examples, a very, very important part of this video, and then we're gonna wrap this up, all right? So let's move on to chart examples. All right, so what we're gonna do regarding examples, I'm gonna show you trades that I took and I shared in my Twitter account. So if you didn't follow me in my Twitter account, I'm going to leave the link down in the description. I'm going to show you only entries and exits, right? Only the lower time frame, and we're going to talk about what the higher time frame is doing. And then in a later video, the next video, I'm going to do a long backtesting session, and we're going to dig deeper into the details of reading the context, the higher time frame, how the intermediate time frame is moving, right, from a higher time frame zone, and the actual pattern in the lower time frame. All right, because if I'm gonna do this in this video, it's gonna take forever, guys, and it's gonna be like a 2-hour video, a movie, instead of an educational video. So let's take a look at some of the trades or just chart examples. All right, so here we have a chart example of that model. I don't want you to focus a lot on the time frames, guys. All right, I said on the explanations, the 5 and the 15 second and the 1 minute. Call it A, B, and C, and apply it on every single time frame. All right, so here we have that build up, right, above an unmitigated zone. The higher time frame, we tapped into a zone, as you can see here. This one right here, we tapped into a zone. We have a candle structure shift, and now, as you can see, we have the same model right here. As you can see, we have a build up, a range, a shift in structure, tapping into an unmitigated zone. So this is, in this time frame, this is looks like a market structure shift, but it is only a pullback into this one, and we are aligned with the higher time frame to trade higher, and indeed we traded higher. So this right here is our optimal entry, and as you can see, price immediately traded above. So I get a lot of questions whether you look for confirmations here. No, I don't look for confirmations, because this sweep and the rejection happens too fast. You will not get that, I don't know, like that market structure shift, breaking above an old high, retracing, you take an entry. No, this is a sweep, enter, and exit from here, as you can see. So here we have another zone, unmitigated zone right here. Price is building liquidity above it, and then one more time, digging all the way to here, tapping into it, sweeping all these lows, right? This looks like a market structure shift. No, it is not. It is a pullback, all right, on a higher time frame. Tapping into this zone, and this is your entry, and then continuing higher. Let's take a look at another example. Here we go. This is a beautiful example, and price went all the way to the upside here. It continued all the way to the upside. All right, so here we have higher time frame flip, as you can see, and this is the pattern. We have an unmitigated zone here. We have the first stop. Price is now ranging above it in a range. What do we expect? A stop into the zone, right? This unmitigated zone, sweeping all these lows, and then, as you can see, after the sweep, price will heavily reject to the upside. Now let's take a look at entries now. This is a sim entry, as you can see. After I finished my trading session, we have, as you can see here, we have a expansion. Now we are building liquidity, we are consolidating. So as you can see, my limit order was here upside this high, right? Because I know that we could potentially see a sweep and then immediately reject, and that is exactly what happened. As you can see here, let's take a look at, so there we go. This is an actual trade on a funded account. As you can see, we have a zone. This is the 5-second time frame. On the 15-second time frame, we have a simple expansion, pullback, another expansion, and this is the zone right here, this blue zone, right? So price is now building liquidity above it. We have this lows right here, and I can expect price to sweep those lows into the zone and then continue higher, right? And this is exactly what happened. And guys, I want you to notice something very important. After each sweep into the zone, notice the rejection, how heavy the rejection is. Clear rejection, strong rejection, consecutive up close candles in all the examples, all right? Most of the examples. Let's take a look at another one. All right, so this is beautiful, all right? This is beautiful example, and it fits what I have mentioned about the rules or the filters, right? Here we have a zone, all right? We have a zone, as you can see. Price is now building liquidity above it. And then we have a market structure shift, right? We have a consecutive down close candles breaking this low into the unmitigated zone. So this is our setup, right? But it wasn't aligned with the higher time frame. This is not the right context. Why is that? The first thing is that we broke above a high, all right? We broke above an old high, a higher time frame high. Now you don't want to buy high, you want to sell high and buy low. So we can expect a retracement. That's the first thing, all right? I don't want to buy a zone, a 5-second zone, after we just broke an old higher time frame high. Otherwise you are trading support and resistance and a breakout of resistance, all right? So I don't trade that way. The second filter is that we have a lot of swings to the upside, all right? We had like 6 or 7 swings, so I don't trade continuations after 5 or 6 swings, all right? So I didn't look for a setup from here. But remember what I have told you before. I told you that even if this setup will fail, right? If price was to continue to the downside, it will chase back into this unmitigated zone, right? So after a market structure shift, we can look for that retracement into the zone and then continue lower. So as you can see, the setup works. If you enter from here, exiting from this zone, just like I've explained in the beginning of the video, you could have got your 1-to-1, right? But I know that this setup is unlikely to work, so I left it and I entered on the flip. As you can see here, a simple market structure shift. Let's take a look at another example, another beautiful example. As you can see, this is a 5-second time frame. This whole zone is belong to a higher time frame zone, like the 15-second, all right? So this visible on the 15-second as well, or even the 1 minute. And we are bearish on the higher time frame. Price was building liquidity just below the zone, and in this case, this is not the zone, this is not the unmitigated zone, but this one right here, this fractal inside the zone. We are building liquidity above it or below it, I'm sorry. And then what do we have? We have a wick above this high, deeper into the zone, and then immediately reject to the downside. As you can see, price decided that it was time to pull back on the higher time frame. So price from here continue to the upside, and I still get my 1-to-1 exiting from here, from the unmitigated area that has been left after this market structure shift. I'm sorry. Let's take a look at another example. This is another example on Bitcoin chart. Market structure break, enter from here, and then continue to the upside. Another example, we have an unmitigated zone, as you can see, building liquidity, entering here, as you can see, on the sweep into the zone. And then what happened? Price immediately rejected to the upside. You have absolutely no confirmation in here, so you don't need a confirmation. You can enter directly. let's take a look for another example. Another example, as you can see, building liquidity, unmitigated zone, taps into it, and notice how heavily price rejected to the upside. Let's see if we have another example. Another example, as you can see, building liquidity, sweep, and then heavily rejecting to the downside. All right, I believe that's enough example. All right, one more time. Liquidity, as you can see, building a liquidity above an unmitigated zone, right? Price taps or sweeps all these lows, tapping into the unmitigated zone, entering directly, and notice how heavily price rejected to the upside. So this is why this is the perfect entry. Another one right here, as you can see. All right, so this is a nice example. All right, we also have the pattern here, and this is happening inside a higher time frame zone. And what's beautiful about this example is that maybe you are expecting an entry from here, right? Because we have this zone, unmitigated zone, liquidity, and then here. But this whole zone, or this whole leg to the downside, it would have stopped you out if you entered from here. All right, so this whole zone, or this whole leg, this higher high series of higher highs and higher lows, and then this sudden move is on a higher time frame is like this. So as you can see, this is on the higher time frame. All right, so this leg is a pullback into a higher time frame zone, unmitigated zone. All right, so as I told you, price will not keep printing higher highs and higher lows forever. It needs to break all of them to pull back into a zone in the higher time frame, and then continue to the upside. All right, so this is something that you need to pay attention to when backtesting. Here's another beautiful example. We have this unmitigated zone, prices building liquidity above it. We have a break of structure, leaving an unmitigated zone, tapping into this zone, this unmitigated zone. So we are entering from an unmitigated zone, exiting into an unmitigated zone, as you can see, right? Entering from here, exiting from here. I shouldn't waited for a confirmation here, and honestly I didn't wait for a confirmation. I believe I entered late, so I didn't I was away from the chart, so my perfect entry would be around here, right? And then exiting from here, and price continued to the upside because we still had a zone, as you can see, to the upside. We are trading to that zone. All right, so now I believe this is the end of this video. It was a complete model with examples, with everything. Of course, you need more and more examples. We're gonna do that in backtesting videos, right? Other backtesting videos. And also you need to collect examples by yourself and start backtesting this model. If you have any questions, DM me on my Twitter account or leave a comment down below, and I will answer you as soon as I can. Now, happy trading and good luck.